Hello traders. In this video, we will give you a quick crash course of candlestick patterns. Here are some things which you will know by the end of this episode. Anatomy of a candlestick. What each part of a candlestick means. Identify basic candlestick patterns. Learn most commonly seen single, double and triple candlestick patterns. What are some different variants of candlestick patterns? Lastly, how to trade with these candlestick patterns. Anatomy of a candlestick. The lines you see at the top or bottom is called a wick. The middle of a candlestick is called a body. The length of the body is based on the open and close price of a candle. A bullish candlestick is colored in green. In a bullish candlestick, the candle opens at the bottom of the body and closes at the top of the body. A bearish candlestick is colored in red. The opening of a bearish candlestick is at the top at the body and closes at the bottom of the body. Now that we know the basics of a candlestick, let's move on to some basic candlesticks you may see. The first is a doji. The opening and closing of a doji are of similar prices. What does this represent? It represents market indecision. Whether you see it on an uptrend or downtrend, it tells you that buyers and sellers are uncertain. We need additional confirmation to determine where the market may be headed. For example, if we see a doji at the end of an uptrend, followed by a bearish candlestick, this can be used as a confirmation that the price is likely to go down. Doji candlesticks are useful in a trending market and are more effective in an uptrend than a downtrend. If you see a doji candlestick in a ranging market, it does not mean anything. In an ideal doji candlestick, the opening and closing price must be close to each other. The top and bottom wicks of a doji are of similar lengths. Do you know which doji candlestick is stronger? This is the answer. The longer the wick, the stronger the signal. Here are the different variants of doji you may see. We have the dragonfly doji, and gravestone doji. Dragonfly doji is a strong bullish signal, whereas gravestone doji is a strong bearish signal. The dragonfly doji is a strong bullish signal. The ideal dragonfly doji does not have an upper wick. Sellers came in initially, but buyers managed to push the price back up and the buyers won. Hence, dragonfly doji is a bullish candlestick pattern. A dragonfly doji is the most effective when found at the end of a downtrend. The exact opposite is said for the gravestone doji. Gravestone doji is a strong bearish signal. The ideal gravestone doji does not have a lower wick. Buyers came in initially, but sellers managed to push the price down and sellers won. Hence, gravestone doji is a bearish candlestick pattern. A gravestone doji is the most effective when found at the end of an uptrend. The next pattern we are going to talk about are these candlestick patterns. All of these candlestick patterns can be both a bullish or bearish signal, depending on where it is located. One important thing to note about these patterns is that the color of these candlestick patterns are irrelevant. The hammer and inverted hammers are bullish candlestick patterns. These two candlestick patterns work best at the end of a downtrend. The hanging man and shooting star are bearish candlestick patterns. These two candlestick patterns work best at the end of an uptrend. Please take a moment to look through how these candlestick patterns may look like. The hammer and inverted hammer are typically located after a downtrend. The hanging man and shooting star are typically located after an uptrend. Next candlestick pattern we will show you is the spinning top. It is similar to a doji. Spinning tops are most effective when found in a trending market. In a ranging market, spinning tops will not be that effective. Spinning tops are most effective when found at the end of a trend. Similar to a doji, the longer its wick, the more effective it is. Ideally, the lengths of its upper and lower wicks should be equal. There are more single candlestick patterns which will be covered in another video. We will only be talking about the most commonly seen candlestick patterns in this video. Let's move on to double candlestick patterns. There are two main types: bullish and bearish engulfing, bullish and bearish harami. We will now cover the bullish and bearish harami. For these candlestick patterns, the candlestick color is important. The length of the wicks are less important. The larger the difference in body size between the first and second candle, the stronger the signal. A bullish harami consists of a big red candle, followed by a small green candle. This candlestick pattern is useful in a trending market, especially at the end of a downtrend. A bearish harami will be the complete opposite. The first candle will be a large green candle followed by a small red candle. Here's an example of how a bullish harami can be used. In an uptrend, if a bullish harami is seen during a retracement, you can potentially take entry. As always, you do not trade on candlestick patterns alone. Other indicators must be used as confirmation. Time for a quiz. Which bullish harami candlestick is stronger? This is the answer. The larger the difference in body size, the stronger the signal. We will now cover the bullish and bearish engulfing. For these candlestick patterns, the candlestick color is important. The length of the wicks are less important. The larger the difference in body size between the first and second candle, the stronger the signal. Ideally, the smaller candle should be below the midpoint of the larger candle. A bullish engulfing consists of a small red candle, followed by a big green candle. A bearish engulfing will be the complete opposite. The first candle of a bearish engulfing will be a small green candle followed by a big red candle. Here's an example of how a bullish engulfing can be used. In an uptrend, if the bullish engulfing is seen during a retracement, you can potentially take entry. There are more double candlestick patterns which will be covered in another video. We will only be talking about the most commonly seen candlestick patterns in this video. Let's move on to triple candlestick patterns. We will now talk about the morning star, a bullish candlestick pattern. A morning star consists of a large red candle, followed by a small middle candle. The color of the middle candle is insignificant. The third candle consists of a green candle, which is larger than the middle candle but smaller than the first candle. The third candle should ideally close above the middle of the first candle. A morning doji star is similar to a morning star. The only difference is that the middle candle is a doji. The morning doji star is a stronger bullish signal compared to the morning star. We will now talk about the evening star, a bearish candlestick pattern. The evening star consists of a green candle, followed by a small middle candle. The color of the middle candle is insignificant. The third candle consists of a red candle, which is larger than the first and second candle. An evening doji star is similar to an evening star. The only difference is that the middle candle is a doji. The evening doji star is a stronger bullish signal than the evening star. The next triple candlestick pattern we will talk about is 3 white soldiers and 3 black crows. 3 white soldiers consists of 3 consecutive bullish candles. 3 black crows consists of 3 consecutive bearish candles. These two patterns can be both continuation and reversal patterns, depending on where it is located. For example, if you see 3 white soldiers at the end of a downtrend, it could possibly indicate that the market is about to reverse. Ideally, 3 white soldiers should have no or minimal upper wicks. Similarly, 3 black crows should have no or minimal lower wicks. You have reached the end of this episode. Please like, share, and subscribe.